Walgreens made a costly decision in more ways than one. America's largest pharmacy is keeping its headquarters in the U.S. The store's parent company, called simply Walgreens, considered a move overseas where it could pay a much lower corporate tax rate.
Investors didn't like the choice. Walgreens stock dropped more than 14% in the past 2 days. President Obama says lawmakers are working to keep American companies from shortchanging taxpayers.
These accounts are saying, you know what, we found a great loophole. If you just flip your citizenship to another country, even though it's just a paper transaction, we think we can get you out of paying a whole bunch of taxes. Well, it's not fair. It's not right. There is legislation working its way through Congress that would eliminate some of these tax loopholes entirely.
CBS News contributor and analyst Mellody Hobson is in Chicago. Walgreens is based in Illinois. Mellody, good morning.
Good morning.
So why did they decide not to relocate?
I think they looked at the tax savings, which is huge, $4 billion they could save. They compared that to the backlash that is growing, the concern, people feeling that these people who use this technique called an inversion, inverters are deserters, we're now hearing people say. They looked at that, and then they also looked at the revenues that they derive from the U.S. government, specifically Medicare and Medicaid, which represent $17 billion of their revenues, and they said, maybe we shouldn't put that in jeopardy.
And what about the stock getting hammered?
Well, the stock got hammered because a lot of the investors say we don't get this added profitability from this tax savings. And so they thought over the short term, this doesn't look great for them. I think they're making a long-term decision. I actually think in this situation, they made the right decision, because the other thing the U.S. government has said, they may come back retroactively and tax some of these companies.
Mellody, I mean, since 2011, there's been something like 24 firms that have relocated. They save billions of dollars in tax money. I can remember when I was covering the White House 2 years ago, this was a topic for the Obama administration, lowering corporate tax rates, and still nothing has been done. Why? And what does it mean for U.S. companies?
Right. So the U.S. tax rate has come down over the last couple decades. It was high as 46% at one point on the corporate side. It's now 35%, but it's still the highest tax rate of any developed nation. Now compare that to someone like Ireland, a country like Ireland, which is 12.5%. You have a lot of these companies, particularly those that derive a lot of revenues overseas, saying, maybe I get a better deal by being somewhere else. But everyone looks at this and says, this is an arms race. You could lower the rate, and then there's still going to be another country with a lower rate, and maybe someone still defects. So it's not just a question of tax policy.
All right. Mellody Hobson, good to see you. Thank you so much.